Concurrent. This is now on my watch list. Okay, it was number 105 on the list, something like that, and it came back up straight into number 5. And this is, look at that, all green on the screen. It's amazing how it turned around. In fact, what I'm going to do actually on the thing, I'm going to develop a little side panel there next to the ranking, showing what the ranking was maybe last week or last month. You can see if something's gotten down, you know. But look at this, upside 58%. So it is not, the value isn't really there yet. But if it comes back, of course, the value becomes more compelling. But enterprise value 77 million, revenue 31, cash, plenty of cash, no debt, good cash flow, all green on the screen, apart from the value. Now, of course, as the share price goes up, then that value becomes less compelling, less attractive. But nevertheless, where are we going to? So look at that. That's half-year results, all red there, and then full-year results now going to amber, 1 red. So it's improving. Even the sort of current ratio is improving. Cash went from 2.9. Did they do is that cash generated? Did they do a fundraise? Cash generated finance. Oh, they did. By debt. No, it must have been a fundraise, yeah. Must have been an equity fundraise. But nevertheless, you can see the improvement in your figures. So going forward, looking at the forecasts, margins, in fact, operating margin, EBITDA margin, but they are in, so if you know what they do, which is in defense, and as we know, there's so many wars going on around the world at the moment, to design and manufacture a range of computing products for use in critical embedded applications. And some of these are, you know, in war-torn areas, in you know, computers in the area there. So if you click the logo, by the way, it takes you to a company's website. There we are. Concurrent acquires Phillips Aerospace. So they do the mirror. So this area is very hot. Let's have a look at the chart on this. But if they come back, I would seriously think about buying them. They're on my watch list. But like I said, they've risen quite a bit recently. And if you look at this, it's popped out again. No winner wins below the 200-day moving average. Okay, so don't try and guess the bottom, because it's not worth it, because they can keep going lower. A new bottom can be formed. But if you look at this, we've got the RSI, what's called a relative strength index. And essentially above 70, they start saying it's a bit overbought. Now, a share price really moves above 70, but I wouldn't be buying it above 80. Very few share prices stay above 80 for long. Like I said, there, it came back. So this is going to have a pullback. And when it does, I may be waiting for it. So it may have a pullback, okay? But I think it's a quality company that, I mean, margins are a bit slim, but they are in the manufacturing sectors, which is a bit more capital intensive to make stuff, of course. You know, actually make real things out of metal and plastic and all that stuff costs more than just software, pretty much. You know, copy and paste software. So looking at where is it by? No, there we are. Not there. I've lost it now. Oh, there it is. Sorry, Concurrent. So we scroll down. If anything, efficiency, it's fine, isn't it? It's, you know, gross margins are 49%. You want to get maybe, you know, above 40 is fine. Investment in manufacturing is very good, I think. Return on capital is improved from 7.3. Above 10 is the green light. Momentum is good. Broker target's 58%, so decent. Decent, but I think it's going to need a pullback. Okay? It could go higher, but sooner or later, if it keeps going higher, it will have a pullback. So never chase a stock like that, because it's really, you know, overcooked a little bit. It's risen, done very well. And in fact, if you just keep an eye on it, since you can see here, it's pretty much a, you know, downtrend, bit of a messy range. Let's get rid of that. A messy range. And then you can see there, you know, popped above that, came back down, didn't break that one, didn't break that one again, broke up. There we are, above that range. It started moving up then nicely. So, and all these are, you can see they broke above that. So, and, you know, and just an example, downtrend, you know, series of lower highs, you know, series of lower lows, and then look at that. In fact, look at that. If you draw that down there, you know, and you sort of, you see there's no more lower lows there. You see that? So that there, it forms a higher low. Okay, maybe that's the bottom there, but then it broke a new range.